This is Business Nigeria. For weeks, global financial markets have been navigating heightened uncertainty as geopolitical tensions and military conflicts continue to shape investor sentiment. While some major stocks have shown resilience driven by gains in technology and artificial intelligence stocks, others remain under pressure from concerns over inflation, energy prices, supply chain disruptions, and the broader economic impact of war. In Africa, investors are closely watching how global developments could influence capital flows, commodity prices, and local markets' performance. Now, to help us understand how global and African markets are responding, I have joining me via Zoom the Chief Research Officer, Invest Data Consulting Limited, Ambrose Omodion. Thank you so much, Ambrose, for joining us.
Thanks for having me. Yeah.
Okay, so global markets have weathered wars, tariffs, and persistent inflation in recent months. Are investors becoming desensitized to geopolitical risk, or are markets underpricing the dangers?
Yeah, actually, the market is not underpricing danger. Rather, they are trying to create opportunity around the dangers to create wealth. Because in any market condition, whether there is no positivities or negativity, there's always an opportunity to make money. It's about you trying to navigate between the two. But I'll tell you that globally, there are three major factors that shape the global market. While that of Africa is a different ballgame entirely. But when I talk about global market, I'm talking of US, the major one, Asia and Europe. It's just three major things. One is what? Oil and in AI. I mean AI, I'm talking about the AI related stocks. It's what shape the whole thing. But I believe that before this time, tariff have kind of give a lot of misdirection. But when the war came on board, it changed the whole dynamics. But those that understand how the financial markets work, be able to navigate this period, even when in first quarter of the year in those global markets, they have some challenges. But in Q2, despite the war was going on, there were still some stocks or some sectors that are still benefiting from what is happening, especially those that are into defense manufacturing. All of them made money during this period, even when since Russia and Ukraine started their war, they are making money. That means investors are looking at where is the opportunity. That's like I said, in any condition, there must be where investors can make money. For you to read the war is that you must understand what is important, positive or negative. Like I said earlier, that is what is the war, the oil, and what the AI stock that are shaping the global market. But going to Africa, in fact, Africa, I'll tell you that is the story of reforms that have shaped Africa market as we speak. That is why when the war broke out, we saw when every market was going up and down. Major markets in Africa were in green. They're still making head up. Why? Because people are looking at there's a lot of opportunity in emerging economy, especially where there's reform and there's change of dynamics in business. That is also people are still coming to put investment in Africa. And I tell you, Nigeria is one of the destination for this investment because of reform also are weakness so far in our domain. I believe that investors are navigating where is that opportunity, whether there is war, whether there is oil high prices, whether inflation around the corner, there's always a place to make money.
So despite ongoing conflict now, several major equity markets have remained close to record highs, largely driven by technology and AI stocks. Is this optimism justified, or are we just looking at another asset bubble?
If you say asset bubble, for me, before now, we said that most of the AI stock in mature economy is overpriced. But when they pull back and results ahead, you saw that it become a bargain hunting sector for investors in mature economy. And they went back. Why? Because they see that those companies have capacity to put better number. But in terms of the general shaping of the global economy, we know that the war change the dynamics of what inflation because oil price has gone, energy price has gone up. So in that, we know that sector is going to make more money, and investors also. But when the peace accord was signed, you saw how the oil sector also lost, in few days that because of that peace. But when it now started for another, say they're going back to strike again, I see that people also going back to that because they know that there's something that will trigger a movement in a sector. For that, investors will only look at where can we navigate to. That's why I think that anywhere, either in Nigeria, across the globe, sector rotation is key for you to make money, unless you are just following bandwagon in the market.
Okay, what about oil prices? Many say oil prices often spikes during crises of this nature. At what price per barrel does higher oil become more of a threat to global growth than benefits for oil-producing countries like Nigeria?
Actually, I think you have is breaking. I'm not hearing you very well. Can you repeat your question?
Okay, I'm talking about oil price. It often spikes during geopolitical crisis of this nature. At what price per barrel do you think at what point does higher price in oil become a threat to global growth than a benefit for oil producing countries like Nigeria?
It is a two-way thing. For those that are oil producing nations, that either among the OPEC or not, when there's spike in prices, they smile, they make money. But other people that are consumers, those that are depending on those oil, they bear the brunt. It becomes a problem to them. But to make it, to balance it, it is for me, when oil price is between that $6 to $80, I think the world feel a bit stable. But once they're above $80, that companies that need to hit up their business, factories that they just have become, then they pass this cost to what to consumers. That's when the inflation starts all over the world, everybody will be shaking. But I believe that from the report I just saw today that we're seeing that this year we're going to see a kind of a fall in demand for crude oil. After post COVID-19, it tells you that yes, we're seeing there many ships that were kind of stranded in this all this whole all this whole go up and down in terms of war, instead of strike. But if those ships start living there, and we see that Russia have benefited from this war because they are selling, you are seeing that people are trying to manage what they have. But if oil remains a bit at a stable price, I will tell you the global economic benefit, because inflation will be a bit stable and will start coming down. We'll not see that people can afford that. When inflation is up, it drills both the economy and consumers. It's not because consumers will now be spending more of their money, because don't forget that it is what you have that you use to consume. If there's high inflation, less you can consume. Also, those companies that are producing goods will remain on the shelf. And so most times you want to pass the cost to your consumer. And if the cost is too high, they leave your product. Then your product, that means there's always a balance for that of inflation and high cost of petroleum, but of oil. But I believe that also investors in the market know that during high cost of crude oil, companies in that sector make money. Also, they also want to key into it, because at the end of the day, their bottom line will be in green, which is good. Also, like all this war that's coming up, both in Russia and Ukraine, also, you see that all those companies or those sectors that are into defense equipment and all those manufacturing, all this kind of hardware for war, they are making money, and investors are also reaping from it. That means you must look at where is company going to benefit, where is the sector going to benefit in terms of any activities in any kind of a situation. Either we're seeing a booming economy, we're seeing a booming economy. How can it benefit? That's why every investor should understand the trend of any sector or any economy is trading, to know how to understand, to navigate in and out of a sector or position, or in and out of stock to fixed income. You must understand how to move your money around. That is how you remain ahead of the market.
So during periods of uncertainty, gold has remained a preferred safe haven asset, of course, during wars and all of that. What does this tell us about investor confidence in the global economy?
But recently, you can see that even when there is war now, gold has also been shaking. Before, that is the safe haven for a lot of people, that anything that can run to gold. But recently, we saw that gold also shake during this period. But for me, it's you to understand what you see that a place to hedge against all this kind of situation. Gold also remain, like you just said, a place to put. But I tell you, most times it's not that gold is the final place to stay. I believe that cash is most time people who cash, because when you have cash, I think that cash is king to a level. That's why I believe that in any investment you are making, when something like, because when there is cash, opportunity that you can navigate, even when you put your money in gold at times. When you want to stay, you want to take it up. But if you have cash, you can also move around. But gold is part of it. But I believe that we have seen all this both gold touching our size almost 5,000 years before start coming down again. That is that all these things are oscillate. I mean, I tell you that when you say that there's free spirit investment, I think that there's no free investment anywhere. Only that there's a kind of minimum or reduced risk. Every investment has its own element of risk.
All right, so central banks now are still balancing inflation and economic growth. How has geopolitical tensions made that job even more difficult?
I like the way you put it. It's a difficult task for every central bank of the world at this time, because when today you are hearing that peace accord is being signed, you try to kind of adjust your strategy. The next is coming, you need to push you up and back, and that's what you need to also understand, because the cutoff for every central bank that the price stability must be there, the economy must run. That means if all these things are going up, it become a problem for the policy makers. But I believe that because the dynamics every time, any day, most of the central banks of the world have hike rates. Some are still waiting to hike. Some are still waiting to see what will happen. But in between this, there must something to be done. Either you hold your rate or you hike. When you hike, also we are also prepared that any move you see, you can adjust them, because when you hike rate, you are stifling your economy, because you are putting the economy. But when you also reduce rate, you want to also cause more inflation because of it. But you need to balance it anytime, any day. That's why they are called policy maker. For me, central bank has really job to do this period because of this oscillation, this kind of volatility, in inflation and oil price and all those stuff at this particular time. It's a global thing. It's not only just Africa. It's a global thing.
Okay, so in talking about Africa, we see that foreign portfolio investors tend to flee emerging markets during periods of global uncertainty. Is Africa at risk of another capital flight?
For me, I will not say capital flight. I would say Africa would be a place of, kind of a destination for investment or inflow of capital. These people that are fighting war, and if you look at their policies, Africa become a greater place for them to make money. Especially if the story in Africa is about reform, and that reform is going to cause expansion in the economy. They
Okay.
want to come and participate with us. What's happening? For me, it's the war that's happening is a blessing to Africa, especially as the bomb is not coming to Africa, the strike is not coming to Africa, who are to benefit from it, because all of them, they want to diversify their source of whether source of business. Africa will be a new market for them. It's an opportunity for Africa to put their house in order to attract more business from all these countries that are at war, those that are confused, those that want to find a new partner, because war has really opened every economy to say that you must look elsewhere to do business, that you can anytime wear a place to run at the end of the day. For me, Africa is a blessed continent at this time, but it's not done our leaders to put this reform was in and sustain to attract more inflow to us. That's what now I expect from Africa.
All right. Could current global tensions actually benefit African commodity exporters through higher prices for oil, gold, and critical minerals?
Already you said it all. Already you can see the price. Like Nigeria, why we producing? It's not because we're not meeting OPEC quota, but I think
Yeah.
recently we met that twice. If we consistently meet it, I think it's going to be a lot of support for our central bank to manage our resources, because we're only a monopoly economy. If we're earning more from oil, it's good for everybody. That how we destroy this revenue is what matters, because it's not going to stay. It's just for a moment. That as it comes, like I tell you, that it's a windfall. How do you take advantage of it to use to expand other sectors, so that even when the free work for go out, you have to, this is what I benefited from this period. That's the thing we expect to Africa to do. Even other where they are producing gold, let them take advantage of this high price to earn more and also develop their economy, so that at the end of the day, it's a benefit from what has happened this period.
All right. So many believe that African stock markets are devalued. They actually describe it as undervalued. Is this finally Africa's opportunity to attract long-term investors?
Yeah, I see. I agree that this is the time, but we need to also work on ourselves or our companies. If we're saying our stock is undervalued, we need also to put that value in terms of matching up the new price we are seeing or limited price we are seeing with our performance. It's not just attracting fund. Fund want to come to the economy if you're able to sustain it. If the company is doing well and the price is going up, only will take that stock. But it is about performance. And like I said earlier, this is an opportunity for all this reform we're seeing in the economy in Africa to impact different sectors, indirectly impacting company performance that will attract more inflow. But it is now done on the policy of the company to move in the trend of that direction of price. Can give kudos to Nigeria companies. When price were elevated from 2023 to where we see today, also we see that the company's reward system also changed in that direction to sustain that trend. For me, it's a very development. If other African countries can go in that direction, say that Africa will remain a destination for foreign inflow.
All right. So the Nigerian exchange has delivered some strong returns over the past 2 years. Are current valuations supported by company earnings, or is liquidity driving the rally?
I would say that both are support of the market. Companies
Okay.
in Nigeria are still having a good price to earning ratio.
Okay.
And also our market to price earning is still very, very strong compared to others. As we speak now, our market to price to energy is still almost around there between 15 to 17. All other markets, either a margin of frontier markets are in around 22 to 24, 25. That means our market is still undervalued. I will still have upside potential that the market to go. There's no cause for alarm because our companies are doing well. That is why the earnings that is coming from any moment from the 3rd week of July will also prove where Nigeria stand in terms of performance. If also beat expectation, that also attract more flow to our only that this pre-election year. I will tell you, no matter how it is, that kind of uncertainties will come, even if it's not as high, the previous election year, because that in Nigeria, let's say pattern for election year. But if some people don't understand it, and also we Nigerians, as we speak now, I'll tell you, we have more Nigerians in the market. When I'm Nigerian institutional investors that are in Nigeria, we must understand the kind of pattern we see in election. They might not panic to sell, but if a market is controlled by foreign investors, it now become another thing. But if foreign investors are saying that we that are here, the institutional investors are here, that holding their position, they also come out. I know that election will come and go. And I believe that once our election come in January, they're going to see another rally that also investors will say, yes, this is the place to be.
All right, now, Chief Research Officer, Invest Data Consulting Limited, Ambrose Omodion. Thank you so much for talking to us and giving us your own perspective. Thank you.
Thanks for having me.